A special edition of Earnings Express, and we are here to be discussing State Bank of India, or SBI, the country's largest public sector bank, that has announced its Q1 numbers just a short while back, and we'll be breaking down those numbers for you on this edition of Earnings Express. Let me just give you a snapshot of what we have so far. Well, the profits have zoomed almost 178% on a YOY basis. Net interest income for the quarter ending 2023 June has come in about 24.5% higher at 38,904 crore rupees. This versus the 31,195 crore that it reported last year in the same quarter. Now, if you look at the NPAs, well, that one you can say has fairly pretty much become in line, one could say. In fact, if you look at the NPAs, the gross NPAs have seen a marginal dip, one would say, just about 1.1%, at 0.71% versus the 0.68% it saw last quarter, whereas the net NPAs, that one too also seeing just a marginal change. So one could say asset quality pretty much in line, or rather improving on a sequential basis. If you look at the net interest margins, that one for the lender has grown by about 24 basis points, coming in at 3.47% versus the 3.23 that it saw last year. So let's break down these numbers, see how it will all add up for State Bank of India. In fact, if you look at the stock, though, the street not really taking these numbers too well. We could say, at least in this initial phase, it's down about 2% down, one could say, at this point. But let's look at these numbers individually and break those down. To do the number crunching now, joining me is Akshay Tiwari, the fundamental analyst at Religare Broking. Thank you so much, Akshay, for speaking with us, giving us your time. Let's get straight to it and understand what we are seeing from these numbers. Well, pretty much all in line, we could say. That profit number really giving us quite something to cheer about. But if you look at the other ones, if you say NII, that one compared to the analysts, what they were penciling in, that was somewhere around 40,000, but it's coming in at 38. So how would you be reading these numbers?
Yeah, hi, good morning, sir. Good afternoon, Stacey, and thank you for inviting me. So first of all, let's break out the numbers. So the advances growth of around 15% growth is pretty much in line with what the analysts were expecting. And also the deposit growth of around 12%, which is also what they were expecting. Talking about net interest income growth, so the growth was pretty much as expected, that it will be a decline of around 4%. So it is majorly because there is a decline in the net interest margin. It has come at around 3.5%, which was at around 3.8% in the fourth quarter. Now, the decline has happened because the cost of borrowings has gone up. And that is because there was a repricing in the deposit rates during the period of April to June. So during that period, what happened was the yield on advances were quite stable, but there was an increase in the cost of borrowings because there was a lag in the rate increase. So before that quarter, what happened was the yields on advances were increasing, but there was not much increase in the cost of borrowings. But especially during this quarter, April to June, we saw that the cost of borrowings went up, and due to which the NIMs got reduced, and which is why we are seeing that the NII got reduced. But I believe this was quite expected by the street, and we have seen this trend in different banks as well. Also, talking about provisions, so provisions has also reduced. Now, there was an expectation that provisions will shoot up, and we have seen this in other banks as well. Even in private banks like Kotak and Axis, we have seen that the provision has gone up. But here the provisions has declined, and this seems quite positive to us.
Let me in fact just put out that provision number for our viewers. On a sequential basis, that numbers come in at 2,501 crore versus the 4,392 crore that it recorded on a YOY basis, whereas on a sequential basis, that number is versus 3,316. So provisions there, quite a good sign where you're seeing the provision number come down. But let's break that further down and see, when you're looking at the asset quality as a whole, especially for public sector banks, and given the fact that we have so many IBC cases where State Bank is that number one issuer, the number one lender when it comes to these big corporates as well. How much of this is changing in that we are seeing quarter by quarter sequentially? We are seeing an improvement in NPAs, but as a larger picture, how much of it is actually changing?
So in the first quarter, we usually expect that the MPAs to go up or to remain stable. Now that is because of the agriculture NPA. Agriculture sector, usually the NPA shoots up, and actually we have seen this in other PSU banks and some of the private sector banks as well, that the NPA is not that, it has not decreased that much as it was expected. But in the case of SBI, we have seen that the NPA has gone down. So this is quite a good sign, and the NPA has been reducing for SBI. If you see in the last 1 year, the NPAs has quite come down, and also the slippages has also decreased. So these are quite good sign for the bank and shows that the asset quality is improving in the long term, and we can see that the earnings visibility is also becomes more clearer as the asset quality improve.
Right. So let's look at that slippage number that Akshay also mentioned. We are seeing that slippages ratio at 0.94% versus 0.41% on a sequential basis, whereas coming in at 7,872 crore rupees versus the 3,458. So that is interesting to note. That drastic drop that we are seeing, but let's look at it in a larger context. Let's now that we've seen a whole host of private banks also come out with their numbers, which have been pretty robust. So one could say the banking sector really giving that edge, because we are seeing good credit growth among all of them. So with the numbers here in SBI as well. So what are the kind of headwinds we could say that could face not just SBI being the biggest, but other PSU banks as a whole? What are the kind of headwinds they could face going ahead?
So a couple of things. First of all, the interest rate is something that is expected to be stabilizing, but we will have to look at it that how much of it gets stabilized, because we have seen that NIMs were increasing during the last few quarters. But in this quarter, both public and private banks saw moderation in their NIMs. And although management commentary says that the NIMS is expected to be stabilized, but we will have to wait and see that how much of the NIMS actually gets stabilized or what is the trend looks like. The second thing is the credit is surely shooting up, but there is also an increase in the corporate lending, which is seen across all the banks, be it PSU, be it private. So going ahead, we will have to see that the which bank is lending in their underwriting practices, something which needs to be looked at, and also the bank which will lend to the corporate more lending, that is something that needs to be monitored. And also there is one more thing, that the unsecured lending part, that is also something that will be monitored for the banks going forward.
I was just going to come to that part, because one thing that was flagged off, at least from the private banks, be it Kotak or others, was this unsecured loan, and how that one has increased a lot, especially when it comes to credit card spends, all of those really shooting up. Is that a reason for worry even for a PSU bank, even though most of their lending happens in the agri and bigger corporates? But is that a reason to worry, seeing these unsecured loans really rise?
So for now, we see that personal and credit card loans has been growing at around 30 to 40% year-on-year growth as per the RBI data. But now going as per the management commentary, there seems to be no worry regarding the unsecured lending, and banks have assured that the unsecured lending is done to the right customers who has guaranteed income coming in. So right now there is no sign of worry, but of course, if you see historically, unsecured lending has become a problem. So that is something that we need to be cautious about. But currently, there is no worry as such with regards to the unsecured lending, especially in the private pack, of course, and SBI, we would say.
Right. What about the loan growth figure? Is that on a sequential basis just marginal at 1.1? Is there a reason why that is not picking up, at least for a larger bank like SBI?
So for a loan growth, we tend to see more of a year-on-year number, and a year-on-year number of 15% seems to be quite decent, as there were expectation that the loan growth will be around 16%. So 15-16% growth is fine, and we believe that that was quite on the expected line as such. And also we believe that loans will pick up going forward. Q1 is generally, we see that the growth is around 1 or 2% quarter to quarter.
Right. Okay, Akshay, also give us a picture on other PSU banks. We've seen, quite a bit of in line in with expectation kind of numbers. If you have to say, if I have to just pull out a couple of them that we saw Bank of India, where we also saw the stock really reacting to that number. It was up about 3% in trade, where we there too the numbers recorded saw a threefold increase in the profit number coming at 1,501, 51 net interest also there increasing by 45%. So a lot of good numbers coming in even from the PSU packs. Are there any specific stocks that one should be watching, especially from the PSU banking space?
So our preference is in PSU is always SBI, because we believe that SBI is more rightly placed to take advantage of the tailwind that is being presented by the economy. We are seeing that the credit growth is growing at around 16% year on year, and also there has been improvement in the asset quality. The asset quality is the best quality that we have seen in the last 10 years. So given that this cycle is also like this is the best cycle that is going on for banks. So we expect to see that banks to do good. But going forward, we are positive on SBI from a long term perspective, and we believe that SBI will outperform other PSUs.
Right, and when you're talking about other PSUs, just to put it into perspective, we saw Punjab National Bank on 26th of July. They put out their numbers. They, reported profits about 307%. If I look at the other one, that is Canara Bank, that one had 74% uptake in its profit number. So that bottom line really looking very positive. Could you give us why is this really happening, and is this likely to sustain in the quarters going by?
Yeah, so the profitability has increased in this quarter and even in the last quarter because of the decline in provision as such. We are seeing that the provision had declined on a YOY basis, which is leading to the increase in profitability and the growth numbers that you said. And also on a YOY basis, it is in comparison to the last year. So last year's profitability were a little moderated. So that is why we are seeing that the profitability this time around is getting higher. But given the fact that from a long-term perspective, we are bullish on the SBI, and we believe that the profitability uh, might not be that lucrative as we are seeing that 300%, 400% growth. But yes, it will sustain at around maybe 60-70% YOY going forward in FY24.
Let's look at stock specific now. If I look at SBI alone, one would say, like you just mentioned, it is a player that you would want to look in the long run. But what are the kind of levels somebody should be looking out for when it comes to SBI? Especially if I look at 1 month, if I have to look at that chart, that one also down by about 1.78%. If I look at the YTD chart, that one also down about 5%. So what is this? What should be the timeline that one should be looking at this, and also the target that one could really keep?
So the levels for SBI, I believe, would be first of all the credit growth that it is seeing, and secondly the deposit growth. So SBI has been successful in mobilizing the deposit at a faster pace compared to other public sector and even private sector to some extent. So we believe that uh, these levels, and also the asset quality is seeing continuous improvement in the case of SBI. So I believe these things, and also the return on asset and the return on equity that the bank has displayed. So even in this quarter, we saw that return on asset is around 1.22%, while the return on equity is around 22%. Now 22% return on equity is something which is shown by private banks, but SBI is able to generate that return for its investors. So these are the reasons why we believe that SBI is a long term player, and it will outperform other PSUs in the long term.
Right. Can we also make a comparison between SBI or other PSUs, that whole pack, versus NBFCs and what we are seeing there, especially when we are looking at the broader picture? But like you can see on your screens, we are waiting for that commentary that we're going to hear from the SBI chairperson Dinesh Kumar Khara. Is going to be addressing the media shortly and what they would want to tell us about their numbers. But Akshay, back to you, like I was trying to make a comparison. If we have to look at NBFCs and how they have performed, we saw Bajaj Finance really take it on the chin after its numbers, that too because of those retail and unsecured loans. But if you have to make a comparison as to where SBI is also now going into that whole digital space, and with their whole YONO, that one really picking up even in rural areas, is there a good competition there? Do you think that's healthy? And also, where do the NBFCs really stack up against a big player like SBI?
Yeah, of course. I believe that SBI is giving a tough competition to its, apart from the banking players, even to the NBFCs through its digital initiative as well as the offline initiatives that they are taking. And talking about NBFCs, so NBFCs have created a niche for themselves in particular segment. Like for example, in unsecured lending, we have Bajaj Finance. In the vehicle finance, we have Shriram Finance, or in the rural lending, we have something like a L&D Finance. So NBFCs have created a niche for themselves in a particular market, in a particular geographies, while SBI, I believe, is omnipresent. I would say in the entire country. Their deposit, their sorry, branches are located everywhere, which is why we tend to make a comparison between NBFCs and SBI. But I believe that SBI is going to give quite a competition even to the NBFCs, as you pointed out.
Right. And what about making that comparison with HDFC, and now with that whole merger coming in, that is pretty much, almost pretty tough competition for SBI. So how is one supposed to be viewing SBI versus now what has come to be the behemoth of HDFC Bank?
Yeah, so HDFC, I believe, will take some time to bounce back, given that the focus has been on the merger and the merger proceeds. But HDFC they have been really focusing on increasing their branch reach. Now, this is something which is also seen in the banking space, that since the margins are being stabilizing, so the growth will come from the increase in branches and increase in employees. So I believe that HDFC, although yes, it is the biggest bank and the growth is seen, but I believe that there is room for everyone in the market. I believe SBI has its own set of customers in home loans and auto loans and gold loans, while HDFC will has its own customers, and now with the merger, it will also look to capitalize on its existing NBFC arm.
Right. And can you give us some perspective on the bank Nifty? Now, we've seen that one, quite fluctuate, and one of the biggest components obviously being SBI as well as HDFC, and that counter, though, today, we've been, in fact, over the last month seeing it touch new highs. But as the market goes, that one has been that key position in, really pushing or bringing the benchmarks also lower. So how's one supposed to be looking at the bank Nifty as a whole?
So Bank Nifty, I believe, yes, it is down because of what is happening globally, and that being played out in the Indian indices as well. So Bank Nifty, I believe, will remain a little subdued. Maybe this maybe in the next 3 or 4 days. But I believe that in the long term, SBI, HDFC, ICICI, Axis being the main component of Bank Nifty, we are quite bullish on the index as well, and we believe that the index will give good return to its investors in the long term.
Right. Well, before we even go to the SBI chairman and listen to his commentary, let's also understand, in the macro scheme of things, we are next week anticipating what the RBI is going to be doing when it comes to interest rates. And if you have to look at a whole, that is really what drives these banking sector, the banking stocks for that matter, and that's going to see a tremendous amount of pressure. But given what we've seen, what the Fed has done and the other central banks across the globe, are we looking at RBI also likely to take a pause again, or are we going to see some kind of action come in there from Shaktikanta Das? What is your analysis, if you have one?
So looking at what the state expectation are, and also what our view is, we believe that interest rate might stabilize this time around. Yes, the inflation has been under control, and we are seeing that the economy quite stabilizing. But we believe that a decline in rate is maybe one or two meet away, and we believe that this time around we might see that. Interest rate to be stabilizing.
Right. But a lot is really riding on that, and where we'll see whether the RBI also takes a leaf from what the other central banks are doing, or whether there is enough cushion and room with inflation really easing now. Whether Shaktikanta Das has that liberties to play the growth card this time around. So we'll have to wait and see. But that RBI policy is going to be crucial. On August 10th is when we are going to hear from the governor. But for now, this is